So 2.1% growth for the second quarter. It's a step down from the 3% we saw first quarter, but still better than expected. How are you guys feeling about it?
Well, pretty good, actually. I mean, consumers were the hero. They had explosive economic growth, I guess, better than 4% at an annual rate. We lost some ground. We had an inventory correction, which took a point off. That probably bodes very well for the second half. We're seeing core CapEx orders really starting to steam up in May and June. That's great. Retail sales also May and June. That's awfully good. Look, I think, to keep this thing going in the face of severe monetary tightening in 2017 and 18, 7 rate hikes, I think it's almost a miracle that the economy is growing as rapidly as it is. It's growing faster, way above the prior trend line. And I think President Trump's policies of tax cuts and deregulation and energy opening and trade reform are having a huge impact. This has not been easy with 7 rate hikes.
So that may very well be true, Larry, but I think a lot of people would say it's a miracle that we're growing this fast given President Trump's trade policies. I mean, you call them reform. We saw it show up. Exports were down. That was a drag. Business investment was down. That was a drag. And you have to admit that that is weighing on parts of our economy.
Well, I don't think this trade factor is near as important as the monetary factor. I mean, the global economy is very slow. So that would help explain the slowdown in exports. So I get that. By the way, we have a USMCA NAFTA 2.0 treaty that's pending. If we get that through, it'll add a half a point of GDP per year with about 180,000 jobs. That's what our estimates and the International Trade Commission. So that's actually, from trade reform, going to be a huge growth factor. We're talking to China. Hopefully those talks will continue. Secretary Mnuchin, Ambassador Lighthizer, going to Shanghai, I believe, next week. That seems to be in play. We'll see if they're going to buy the kind of agriculture goods that we've asked them to buy and that they've suggested they would buy. That will all be very helpful. But no, look, getting trade barriers down is absolutely essential. That's President Trump's policy. And if they do, we have such a productive economy with low tax rates and regulations for business, we'll knock the cover off the ball in terms of exports. And so job creation, job creation is part of the consumer story. I don't know, people kind of forget that. Wages are rising, real disposable income rising, unemployment is low across the board. I mean, I think it's a pretty good picture, and I'm hoping monetary policy makes the shift that the markets are expecting.
Larry, the revisions to GDP that were lower for last year specifically, does it raise more concern about whether the tax cut gave us the broad macro payoff we were looking for?
Well, look, on the yearly basis, 2017, 2018, 2.7%. That's a pretty good number. It's almost 3. I know it falls short, but it's almost 3%. And again, we had to suffer through this severe monetary tightening. I went back and looked at the revisions the prior 8 years in the last administration, 1.9%. So we're growing at about a 42% faster pace than that trend line. So I think you can see the clear improvement going on. And also, let me just add to that, productivity numbers are now trending above 2%. That's a terrific thing. We haven't seen that in many, many years. So, no, I think we're in good shape. As, again, we had a lot of monetary headwinds. Hopefully that's going to be remedied. But I think the economy is really poised for a strong second half as we cross over into the third quarter. As I said, with the durable goods report yesterday, core CapEx very strong the last 2 months, retail sales very strong. That looks like we're going to pick up a lot of speed in the second half of this year.
Yeah, no doubt the consumer seems to be quite strong, Larry. Wanted to move to China. We'll mention a tweet from the president because he just came out and said that Apple will not be given tariff waivers or relief for Mac Pro parts that are made in China, making them in the USA. No tariffs. Larry, how do things stand right now between the U.S. and China in terms of the negotiations?
Well, let's see. There again, as I said, they're going to meet next week in Shanghai. Secretary Mnuchin, Ambassador Lighthizer. I wouldn't expect any grand deal. I think talking to our negotiators, they're going to kind of reset the stage and hopefully go back to where the talks left off last May. We were doing well, no deal yet, but still on the structural issues regarding IP theft, forced transfer of technology, cyber interference, trade and non-trade, tariff barriers, and so forth. Certainly the enforcement mechanisms, but if we were 90% there with 10% to go, I call it the 7-yard line. I think our negotiators want to go back to that spot. And again, let me repeat the very, very important note that we strongly expect the Chinese to follow through goodwill and just helping the trade balance with large-scale purchases of U.S. agriculture products and services. So, you know, I think
Larry, have they given any?
Sorry?
Have they given any indication, Larry, the Chinese, that they're willing to go back to that level, to that place that you just discussed, where they will consider yet again those key concessions?
I'm gonna let those talks unfold next week. I'm not going to predict. I'm not going to evaluate. I want to see how it goes. I've been engaged in this issue now for a year and a half. I've been down here. Sometimes what you hope happens doesn't happen. Sometimes your greatest fears are not realized. I'm going to play this from the optimistic side because it's inbred in my body and soul. But we will see how those fellas do. We will see.
Can you give us any sense, Larry, of the likelihood of more tariffs, either on Chinese imports, on European auto imports? I mean, it's kind of an administration where that could happen at any time. So what would you tell market participants about the likelihood of more tariffs coming?
Well, look, the president, again, the basic thrust of his policy is to lower trade barriers. That's always been the basis of his policy. In an ideal world, zero tariffs, zero non-tariff barriers, zero subsidies. He has, as you know, been willing to negotiate on a number of fronts, including tariffs where necessary. He's not afraid to use tariffs. It's part of the negotiations. It's part of the discussions. Most of that economic burden, by the way, in our judgment, has fallen on China. Now, I'm not going to predict the future. I think, again, in a common sense way, if the U.S.-China talks go well, then we would not expect new tariffs. If they do not go well, the president has indicated that the tariff tool is at his disposal, and he might use it. I say might. Depends on how the talks go. Regarding auto tariffs in Europe, all that is on hold for a good many months. But I will say one thing about Europe. We are very concerned that our friends in France are going to impose a digital tax on the big American tech companies. We think that's absolutely wrong. Treasury Secretary Mnuchin is engaged in negotiations through the OECD to solve the issue of taxes and the new economy and the new tech economy and so forth. We are unhappy that France is going to go ahead with some kind of digital tax. And Ambassador Lighthizer has begun, at the president's request, he has begun a 301 action. We filed the paperwork. Hearings, I believe, will be held in August. And then it'll be up to the president to see if he wants to follow through with retaliation. I think the digital tax hike from France is a very, very big mistake. I'm sorry to see it.
Finally, Larry, deficit's up, debt limits up, government spending's up, the sequester's been neutered. When do we hear about fiscal discipline, fiscal responsibility, and entitlement reform, which you were talking about as a 2019 story last year?
Well, actually, there was some confusion about that, but let's put that aside. Look, we never seem to get enough spending restraint, but the deal that was passed gets the debt ceiling and any default talk off the table. That's terrific. We continue to fund our defense side. That is vitally, vitally important. And there's nothing in that deal that would preclude the president's policies regarding border security and related matters. So it wasn't perfect, but at least it's a step in some good directions for our policies. Let's see. The deficit in 19 and 20, 2019, 2020, I think is estimated about 4.5% of GDP. I think that's a manageable number. And I don't think it's interfering. You take a look at the bond market, David. The 10-year is what? Hovering around 2%. So there's no fear. There's no fear and loathing with respect to all that. Look, once upon a time, about 35 plus years ago, I worked for a president who was determined to increase defense spending for national security and lower tax rates for economic growth. Here I am 35 years later, some odd, working for a president who wants to shore up our defenses and provide important incentives for economic growth. It worked well for Reagan. It's working well for Trump. I say we stay the course.
What's not working well for Trump, according to him, is the strength of the U.S. dollar, Larry. Do we have a weak dollar policy right now? And if so, how far are you willing to take that to please the president and get the dollar down ahead of election?
Well, I don't agree with your assertion that the president wants a weak dollar. I don't agree with that at all.
He tweets about it all the time.
You know, he tweeted last week that the dollar is the dominant currency in the world, and he wants it to stay that way. What the president, and I think this might be your misunderstanding, what the president is concerned about is that foreign countries may be manipulating their own currencies lower to try to gain some short-term temporary trade advantage. That we do not like. But it's not a question of bringing down the dollar. And I will say this, just in the past week, we had a meeting with the president and the economic principles, and we have ruled out any currency intervention. So I just don't agree with your assertion. The steady, reliable, dependable dollar is attracting money from all over the world, and that, along with our incentive policies on taxes and regulations and our hope for trade barrier reduction, that's bringing money to the United States in bundles. We are the hottest economy in the world, and I expect us to stay that way.
I mean, thanks for clarifying, Larry, because there are a lot of research notes out there wondering and speculating whether you guys are going to the Treasury is going to direct the Fed to intervene in the currency market because the president has really ramped up his complaints about the value of the dollar. I'm not talking about the stability or whether the dollar is the reserve currency, but clearly he seems bothered by the fact that other countries are doing more stimulus, which is weakening their currencies relative to ours.
Well, we don't want that kind of manipulation. We do not want that.
It's not manipulation. Their economies are growing slower.
Well, perhaps so, but in some cases we think there is manipulation. But I will simply repeat, his tweet was the dollar is the dominant currency in the world. We want it to stay that way. And I will also reiterate my point that we have, as a matter of policy, ruled out currency intervention.